Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur, property investor and an index fund investor. And in today's video, we're talking about why I believe everybody should invest in index funds, in particular today in 2023. So let's get into the video and talk about that. But before we do, if you could give the video a big like, you know it helps me out with the algorithm and I would massively appreciate it. So please hit that like button. And if you haven't already subscribed, why not consider subscribing? We have our subscriber index fund dividend portfolio. So we're the only channel that I'm aware of on YouTube where we actually have a subscriber dividend portfolio. I put another £2,000 in that every single month and we have a draw and all the dividends we're going to pay out to our subscribers. So you and I can take part on a passive income journey together and I can pay some of that money back to my subscribers as a reward for watching the content, and it just means that you get this interactive ability to be able to be part of the journey. So guys, let's get into the video. Let's talk about why I love index funds. And whilst I've got £3.5 million worth of property, I do have 6 figures in index funds. And the reason I have it is the following. Number one, there are incredibly low fees. And it's important that you get low fees. The Vanguard FTSE 100, for example, is 0.06%. The Vanguard S&P 500 is like 0.5%. Oh, 0.05%, sorry, it's like nothing. It's absolutely nothing. Let's look up the exact number actually. Okay, I was wrong. It's actually huge for the S&P 500. It's 0.07%. It's absolutely minuscule. And the really important thing about low fees is when you look at the traditional manager where you were paying about 2% of your money in fees every year, regardless of whether the market went up or down. Over a long run, I think it was Tony Robbins who said in his book Unshakable, you put up 100% of the money, they get 2/3 of the returns. You only get 1/3 of the returns. And you take all the risk. By lowering your fees, you get the spread. Over the long run, they were delivering around about or less than market returns. So what we're looking for is the lowest possible fees. Vanguard, iShares, anybody like that. These are big institutions with big reputations and very, very low fees. So low fees is my number one thing. If you consider, maybe if you're doing a rental property, the minimum you're paying a property manager is 10%. Here, 0.07%. So, ultimately, this is very, very low fee investing. And because it's got low fees, that means that you get to keep more of your returns. I've also put down that it's got low risks, and there's lots of reasons why it's got low risks. Some of them I put down below. But the main thing... Hello mate, I'm just filming. Is it urgent? Why do you think everybody should invest in index funds?
Why do I think everyone should invest in index funds?
Yeah, you've just interrupted my video.
Because it's really good liquidity. It's liquid.
Oh, it's liquid as well. Look, I hadn't thought about the liquidity side of things.
So you can react fast to changes if you need the money, etc.
Yeah, no, that's good. Liquidity is a good one. I'll add that one in. Cheers, man. Have friends like that where you can ask a question, get a good answer. So low risks. I put low risks down on here because really what happens with an index fund, let's just take the S&P 500. If a company does better, it becomes more valuable. And as it becomes more valuable, the index fund automatically buys more of that stock. And as a company does worse, it automatically sells that stock off. So you automatically back the winners and sell off the losers. And that's really important to lower your risk. It's very hard to do in an actively managed fund. It's even more difficult to do if you're going to buy individual stocks. So the low risks really comes from the fact that you automatically buy the winners and sell the losers. Over the time, you're going to get market returns. And that's my point number 3, market returns. Ultimately, if we get market returns, I'm very, very happy. The market has generally performed around about 10% per year when you look at dividends and growth combined. And the reason it provides about 10% a year is because capitalism won't do it for any less. If I could put my money in the bank and get 5%, well, because this carries a risk, because there's going to be businesses involved and all the rest, well, I need at least 10%. And capitalism really demands about a 10% return over the long run in order to run those businesses for you. Now, number 4 on here, global exposure, diversification. This is a really important point. Again, it's to lower your risk. So if someone like Vanguard or iShares, they'll allow you to buy index funds in many global markets. That means that if one country does better than another, then you automatically have more of that country. It gives you this ultimate diversification across countries as well as diversification across sectors. So let's say, for example, the coal industry was really big in the 30s or 20s. Today, not so much, right? and we would have automatically sold down that sector globally, and we would have bought into the chip manufacturers as they became big in the 80s, 90s, 2000s, and beyond. The global exposure, the diversification, the fact that you're automatically buying the winners, selling the losers, lowering your risk, make index funds an undeniable, amazing investment. And my fifth point on here was that these businesses are professionally managed on your behalf. So if you were to go out and run your own business, it's a lot of work for you. This truly is the only passive way to invest in my mind. I don't think there's any other passive way to invest. You can just set this, forget it. Property, you got to insure it, you've got to make sure that your property manager is working okay. This, you don't have to do anything. You don't have to attend the AGM for Apple. If you do, nothing's going to change. So ultimately, you've got professionally managed businesses operating for your benefit. So this is my fifth reason, but I'm going to have to add a sixth, because my buddy Mark, he's absolutely right, liquidity. The fact that you can buy and sell index funds right this moment. If I want to, right this moment, I can buy or sell any of my index funds. The fact that that money can be in my bank in 3 days gives me ultimate liquidity, whether there's a personal life event that's happening or whether it's something, a great opportunity that's happening. I have the ability to raise the funds. Much more difficult on property, for example. If I wanted to get my hands on this 3.5 million, it's going to take me months to sell those on, to pay off the mortgages, to go through the solicitors, to do all the stuff that I have to do to sell a property. With my index funds, done. So guys, liquidity is your bonus one of reasons. Is there any other I've missed out? I've asked my buddy, I might as well ask my audience. Guys, what else have I missed out? What would make your top 5 reasons to invest in index funds? And if I can inspire anybody to invest in index funds, I pray that I can, because I've got so many people involved in this in the past, and once they've been investing for 5, 10 years, they are amazed at the dividends and the growth and how it all snowballs. So guys, believe me when I tell you, this takes time. This is not a get rich quick sort of thing. It takes a lot of time to build a big index fund portfolio. It's well worth it in a decade when you've got all that passive income, all that money being managed on your behalf professionally, low fees, low risks, market returns. It's great. If you haven't already liked the video, I will see you on the next one. Comment down below and we'll see you soon. Cheers, guys.